Hi, I'm Toby.
And I'm Nick.
And welcome to the Pure Property podcast from Track Capital, where we talk all things property and property investment. We look to give you bite-sized chunks of our industry insight and knowledge to help you invest intelligently. So we have got coming up, Nick, or next week. I mean, it's diarised potentially for the 22nd, but I know they're talking about it. Maybe it will be the week of the 22nd that the Prime Minister, Boris Johnson, will be outlining his roadmap, hopefully, of ourselves coming out of the lockdown 3.0. I mean, is there anything that you're potentially hoping for that he might announce?
Yeah, exactly. So I think a lot of people will be sat at the edge of their seats waiting for that. I know we all think it's going to be some form of phased reopening. So yeah, hopefully that's going to be positive. In terms of what we're hoping for, I mean, as a business, it's just going to be nice to be able to make it easier for us to get out and meet people face to face. Technically, as a property company, we are allowed to continue operating as normal, but we obviously got to exercise a bit of common sense. So once we're able to travel nice and easily, meet developers face to face, hopefully meet some of our investor clients face to face as well. It should make things seem a bit more normal. But yeah, let's have to wait and see what he comes out with.
Yeah, I mean, I'm just hoping that he opens schools back up so I can get the kids back out there.
It's a piece of quiet.
Oh God, yeah, definitely. That's one thing I'm definitely waiting for the announcement. But yeah, same as you. I mean, I think everybody's just hoping just for some light at the end of the tunnel, some normality coming back in. Obviously, we know they have to err on the side of caution. They have to look at the data and make sure that it's all done correctly, because we don't want to end up back at square one, of course. But fingers crossed with the rollout of the vaccine and how things are moving forward, we should see some improvement and light in the end at some point. But yeah, that's obviously next week. He's obviously said it should. Well, originally said it was the 22nd. Then there was statements that it's the week of the 22nd. So who will know? But some point next week, we'll find out the roadmap that they are planning, hopefully. But this week, we'll be finding out about the rental market. So that's what we're going to be talking about this week, the UK rental market. We're going to go over how it is performing at the moment, what's going on. And then we'll also at the end sort of give a little prediction into how we see it going forward. And obviously, when we do talk about the rental market, we need to consider this in depth, just because obviously the investments that we're making, property investments, are reliant on being rented out. So having knowledge, up-to-date data on the rental market is imperative to making sure that you are investing efficiently. Because obviously it's not just about the price you buy at, it's what you're going to be looking to rent it out for, what that particular market is doing in terms of demand, rental prices, and obviously this is the major effect on your yield, your rental returns, and your income. So very, very important, and something we do focus on. Obviously prices is a massive factor about what you buy at, etc., but obviously the rental itself is very important as well.
Absolutely, yep. So I think sometimes when investors are looking into the UK market, it's sometimes almost a bit of a given that the property is going to rent for fair market value, and you won't have crazy void periods, etc. I think in other countries they certainly do have to consider this more. But I think if you are buying in a city centre, especially one of the larger cities, whether that's London or the regional cities, then you can always expect strong rental demand. But if you are looking towards the home counties or somewhere a bit less in demand, then we always want to make sure we're doing our research and being absolutely certain that we're going to minimize void periods and get those attractive rental rates. So just to give everyone a heads up, then we've obviously collated a bit of data over the past few days looking at the rental performance of the UK market in recent months. And also a quick summary of 2020 we'll take a look at as well. But some of the sources that we've used and some that you may want to use as well, just if you're doing quick checks, we thought we'd give you a couple to get you started. So home.co.uk is a really good one. That summarizes a lot of data with regards to timeframes, the amount of properties coming to market, the types of properties coming to market, rental values, all in a nice, neat order. The website looks a bit dated, but yeah, there's some really, really useful information there. Hometrack we use a lot for the house price index and their capital growth rates on a monthly basis, but also the rental side is very useful. HomeLet, they produce a very, very comprehensive rental index, so we're going to have a look at that as well, but we suggest you guys check that out online. And then more obvious places such as the Office for National Statistics, and even portals like Rightmove as well provide some really, really useful markets data. So if you ever do need to go out and check out, the demand and how you think your potential property will let, then yeah, check out a couple of those sources.
Excellent. And obviously following on from that, when we are looking at the rental market, there's obviously certain factors that we look at which do affect the rental market. So they are predominantly demand and supply, like most markets, the economy itself, the housing market as a whole, and usually sort of based around house prices, they do have an effect. The mortgage market as well can affect the rental market, and also tenant trends. They're sort of briefly what we do tend to go over. And what we'll have a look at now is what the current state of the rental market looks like. I'll start actually, Nick. So I'll have a look at sort of what the Hometrack report said. So we had, as you would have known from our latest weekly newsletter that was sent out last week, we had the latest quarterly reports. Now, Hometrack do the reports every quarter rather than every month like they do the house prices. So the latest report they have is for Q4 2020. And in terms of what it shows, now, they have shown a increase of 2.3% year on year, but that is excluding London, because as you would have seen from previous stuff we've spoken about, articles we've been going over in our weekly newsletters, etc., and on the podcast, London has taken a bit of a hit in terms of the rental market. So what Hometrack do as well, because London is such a big part of the country and the market itself, they do the report factoring in London and also excluding London as well. So excluding London, as I said, it's up 2.3%, so very good. Across the UK, we now have a monthly rent of £920, and the average time to rent a property out is 15 days. So again, very good, and relaying that point that demand is very strong at the moment. Now, the affordability level. So this is where we look at the percentage of a renter's salary to cover the rent, and this is based on single earners. And at the moment, the UK average is sitting around 32%, which again, it is good. So that is good to see. So the rental growth that we've seen, again, excluding London, it has been reported is being underpinned, as we know, by the continued rise in demand, which is actually up 21% year on year, again, excluding London. So if we then look at London itself, it is a stark contrast where average rents are down 8.3%. And the rental declines are being concentrated in the inner London area. And this is purely down to the rise in supply and slightly weaker demand. As you would have known listening to our podcast previously, whether that's the newsletter or our episodes, when we speak about London recently during the pandemic, we have seen people moving slightly out of London, sort of the inner central London, just to get a bit more space, get bit more value for money as well. And we've also seen increased supply come to the market in London, just down to the fact where a lot of tenants, as we mentioned, are moving out. But not only that, there was a lot of short let properties in London which have now come to the market for long lets, because short lets have been affected in London due to the pandemic. So we do over the long term in the future, London will bounce back. As we know, London is a great city over the long term, and is always a strong property market. So we do see that bouncing back once things get back to normal. The report also does indicate to what they're calling the halo effect in some other major cities, just where, for example, we'll take Birmingham and Manchester. Again, they're having a smaller scale effect that we've seen in London, where a few people are moving out, but it is on a minor scale. And again, they do see this as temporary, just while the pandemic is going on. And they're seeing just slightly out of the city centres having very strong demand. And again, the rental prices are doing very well around there. So again, just something to bear in mind. And also, when we look at the report, it's also good to take into consideration this is Q4 last year, so just do bear that in mind. Obviously, January onwards this year, it may be slightly different. So we're looking at past data leading up to December last year. So just bear that in mind when we're looking at this. But over the whole, the UK rental market is very strong, doing very well. And as you can see, excluding London, we've had an annual change increasing by 2.3%, which is very good. And I think, just to end on, we have noted in the most recent report that we're speaking about, Liverpool has actually got some really strong data and stats at the moment. Now, they're showing days to rent. They are sort of based around 12. So you're looking on average 12 days to rent a property. They have had an increase in the rentals as well. So they are up around 3%, specifically 3.1%. Also, another good thing that we're seeing in Liverpool as well is the affordability for a single earner is sitting around 24%, which out of the top cities that the data looks at is one of the strongest. So the affordability levels in Liverpool are very good. The demand is very good. So again, just really sort of hammering home the fundamentals and the investment case for Liverpool as a city. But yes, Nick, so you've been looking at sort of different data. So why don't you go over what you've seen?
Okay, good stuff. Firstly, really good summary of quarter four, so October, November, December from Hometrack. And to be honest, what you summarised there is a pretty decent reflection of actually what happened over the entire year. So what I'm going to go through quickly is the HomeLet rental index. Now, HomeLet are a referencing company, so they work for landlords directly and also letting agents to help them check tenants. What they've done is they've partnered with Let Alliance and they've produced, basically from assessing over 1 million references across the UK, they've produced a rental index which really goes to show which areas are performing well, which need perhaps more consideration. But ultimately, it's the strongest and most insightful view of the UK's private rented sector. So certainly a good place to have a look at. So what we'll do now is just quickly look at some of the key headlines and the key bullet points, and then we'll look at some specific data of certain regions after that as well, just to try and be granular and be as relevant as possible, obviously with our audience being based in separate areas of the country, or in the globe, in fact. So key headlines. So the average UK rent, this is for 2020. So Jan 2020 to Jan 21, in fact. And so the average UK rent's now £981, showing a 2.9% increase from £953. When London is excluded, the average UK rent is £839 per calendar month, which shows a 5.8% growth figure over the year. So just to reiterate, what they're saying is from January 2020 to January 2021, excluding London, the average rental rate increase was 5.8% for the country. So incredibly strong market performance on the rental side there. They went on to say 9 of the 12 regions showed a year-on-year increase between Jan 20 and Jan 2021. And the Southwest seeing the largest increase for the 5th month in a row at 8%. However, as Toby indicated earlier, London rents have continued to fall, they actually showed on the HomeLet data a 3.9% drop between Jan 2020 and Jan 21. So, in essence, regional locations outside of London have been performing really, really well. London, as we touched on earlier, due to its its international exposure, a lot of people are furloughed, working from home, remote working, of course. People just don't need to be in the centre of London, or haven't needed to be in October, November, December, or certainly most of 2020, in fact. So yeah, there are a couple of the headline points, but if we put this into data, it should really, really demonstrate how the different regions are performing. So London, or Greater London area, the annual variance from Jan 20 to Jan 2021 was a drop of 3.9%. Northern Ireland also showed a drop for the year at minus 2.1%. Now, in terms of regions that have performed well, we've got the Southeast region, where increase was 7.1% for the year, and east of England 7.9% increase, and the southwest an 8% increase. If you go up to the northwest, it's relatively stable, a 1.4% rise. And then you've also got the East Midlands, which was at 6.4%, and the West Midlands at 6%. So, as we've seen, then most of the regions across the UK are actually performing really, really well. It's just London that's kind of dragging the averages down a bit. But by reading the media headlines for the year, you wouldn't think the UK was performing that well. So overall, on average, according to HomeLet, the growth from Jan 20 to Jan 2021 on average was a 2.9% increase in rental values. So yes, rental demand is still there if we're buying in strong locations, and we expect to see that continue moving forward. So hopefully that's a useful snapshot. And I think now we'll probably go on to the rental market predictions, Toby.
Yeah, who wants to take that off first? Are you feeling brave, Nick? Do you want to start off with what you think and start going from there?
Okay, so the first thing that I've sort of thinking of is we're likely to continue to see that demand for extra space in properties continue. Now, this is obviously going to be on the sales side, but also on the rental side. So if you're buying a property to let, you might want to consider this as well. There is likely to be a segment of employers out there that do continue to let people work from home. So as a result, tenants might be looking for a bit of extra space. They might want some outdoor rooms. They might want an extra study area. But yeah, I definitely think there is going to be a shift towards that to some extent. I don't think it's going to be the majority of the market like some people are making out. But yes, I think that demand for space, both internally and externally within properties for tenants, is going to continue to see strong demand.
Yeah, I'm sort of in line with that as well. I do think one of the focuses, especially if we're looking, let's take sort of city centre areas predominantly. Yes, we have seen people sort of moving out of the London areas, looking for more space, as you said, working from home. However, I think we forget about quite a core demographic that we look at when we look at city centres, and these are young working professionals. There are either single people, young couples, and I think they're still going to be around. Yes, they may want more space, but maybe they don't have commitments which may need more space, so they might not have pets or children, for example, which is going to force them for more space. And again, they're going to want to be close to these city centres, because that tenant demographic, they always want to be sort of near where they work, everything on their doorstep as well, and the sort of social aspect as well. So yes, I think we will, like you mentioned, we will lose a bit of the market. They may move out the city centre, enjoy the new scenery or the new space, and may stay there. But I do think we'll have a migration back into the city once this is over, and I think we'll still have the demand from certain tenants there. And I think that's why especially it's very important when you're investing at this moment in time to be looking at good quality rentals, because you want a investment property or rental property to be one of the best that's out there, because the tenants now that are going to be shopping and window shopping, they're going to be looking for good quality. Especially if you're in London, because you've got more choice. But I do think it's very important if you're looking city centre to have good quality stock. And the demand is going to be there, because what we also have to remember is, with how UK property prices are at the moment, and we've seen last year they're still going up, there are still a lot of people that can't get on the property ladder, mainly young adults. So again, that they are still going to be there. So demand for rentals will still be strong over the long term. And again, this comes down to the important factor that we need to be providing good quality rental properties for these people as well.
Yeah, definitely. I think, ultimately buying in a city centre is where you're typically going to see the most demand over the long term. Ultimately, it's the safest place. It's where the major employers are. It's where the universities are, the big social events. It's where the investment goes into. It's where the transport links connect everyone. So yeah, ultimately in the long term, I do think there will be a segment of the market that will continue to work from home with the rise of Zoom and things like that. But hopefully our city centres will be bustling again soon. I'm currently sat looking out the window just off the Strand in London at the moment, and it's very, very quiet. So, yeah, can't wait for it to be a bit more lively again. Cool. So speaking about London, then just going back to that, I do think there is going to be, as Toby mentioned, a trend towards the city centre again, and to people coming back in to the city in central London on their commutes. So as a result, when that demand does come back, we're likely to see that reflected in rental prices. I mean, even if you look at the drop from the 3.9% figure, Jan 2020 was £1,627 is the average value. And now the average value at Jan 21 is sitting at £1,563. So it's still, quite a hefty charge for the average rental values. So yeah, it's definitely still makes a great long-term investment, even though the yields might be slightly lower. And I think another thing just worth reflecting on the development side as well, we're seeing a lot of activity and people buying up commercial premises and converting to residential and creating apartments there as well. You've got a lot of institutional capital going into buying up sort of distressed, unoccupied or commercial premises that are seeing void periods, all in the expectation that it's going to bounce back and that the market will be buzzing again soon. So, wherever the smart money is going, it's, always a good sign. But yeah, the long and short of it is, I'm sure the city centres will be back buzzing as normal shortly. But the rental performance has been really, really strong on the whole, excluding London, throughout 2020.
Yeah, and I think you touched on a good point where we always say look to follow the money and follow the trends of the big institutions, etc. And one thing we have seen, and we are going to continue seeing, is the emergence of the build to rent sector. Again, something you would have heard us talk about previously along the way. And if you don't know, this is where developers come. They build developments, but they don't build them to sell them off. They actually build them to hold them and rent them out. And we are seeing that increasing. We're seeing more and more institutions putting money into these schemes, which again, that shows you that demand is there and is going to be there in the future, because these companies would not be pumping their money into these schemes if they didn't think that the demand was going to be there in the future and they were going to obviously make money off them. So it's a good indicator of where these big institutions, big developers, and the people with the money are looking. They obviously do lots and lots of research. They have access to a lot more data than we have, and if they're saying that's where they see the market moving and carrying on moving to, then again we can take some confidence out of that to say yes, that's how we see it going as well. And I think, Nick, what would you say if you had to, and again I don't want to sort of force you, you don't have to commit to this, do you have what do you think sort of percentage wise, because it's always good to look back. I think we've obviously done it with our predictions for the sales market at the end of last year. So if you had to have a prediction in a year's time, where would we be looking at year on year? Would it be an increase or decrease? What percentage would you be thinking?
Well, if you look at 2020 and what happened and how disruptive it was, a lot of people were forced to move if they're being stuck at home to bigger places, etc. A lot of people didn't commit to property purchases because of uncertainty around lockdowns, Brexit, etc., which probably did mean people sort of rented for longer and maybe didn't move as much. Turnover was lower in general, and we still saw a 2.9% average increase. I do think the market's been a bit more busy this year, and certainly quarter three, quarter four, we'd like to see a bit more of an influx back to the cities and to see that continued demand for rental property. So, with that in mind, I probably think it will. You might see a slight increase in the overall average. I'd be looking at between 3 and probably 3 to 3.3%. So probably just performing slightly better than it has done in 2020. That's probably where I would put it in terms of the whole year.
Okay. No, good. Very, very sort of positive as well, and I can see exactly your line of thought on that. I'm quite similar to yourself. I'm going to be pitching it in there around sort of 3.2% increase. I do think the vaccine rollout is going to continue to be positive. We're going to start to come out of lockdown, and of course, we're not out of the clear completely, and I don't think we will be for the rest of the year. But that said, with the vaccine rollout, with the country wanting to get going as well, hopefully that can be the case. And I think if and when it does, we will start to see people come back to the city centres. They will start to pick up. That will then increase the demand there, which will then help with the rental prices in cities such as London. I think that will then help bring up the average. So I'm thinking an average increase of around about 3.2%, let's say.
Good stuff. Yeah, and I think obviously another thing is we're hopefully going to have more overseas travel as well. So hopefully people that have been waiting to move to London, which typically sees quite high levels of people coming to work here in general and renting property. Hopefully we're going to see that bounce back at the end of the end of 2021 as well. So fingers crossed, and certainly positive from this side. So that's hopefully given everyone a good insight into the current rental performance of the UK property market. Any questions, do let us know. We'll include a couple of the source links we mentioned in the episode comments as well. But yeah, Toby, do you want to let us know what we'll be looking at next week?
Yes, so we're going to be focusing on a popular area of investment and a popular location of investment, and that is Manchester. So we are getting a lot of demand for Manchester, a lot from overseas predominantly, but across the board, Manchester is one of the main areas of focus. So we have done an episode before where we've looked at our top three locations. However, I think just to sort of narrow it down and really go over some areas that are of interest, we thought we'd start with Manchester, as it's one that we are talking about quite a lot with investors at the moment. So next week when you tune in, we'll be going over Manchester as an investment location, and why we think it's such a good location to be investing right now.
Yeah, exactly. So I think the other thing to mention as well is we'll try and go into a bit more detail than you'll typically find just from a quick Google search. So anyone can go out there and they can see, yes, rental prices are rising. Yes, there is capital growth in Manchester, hence why the money is going there. But hopefully we'll be able to provide a bit more of a detailed analysis, looking at development in the city, looking at the government investment, what's happening with the transport, the demand overall for property, and really nail down and look at the mechanics of the investment vehicle that is Manchester. So yeah, looking forward to that one.
Excellent. Well, that's all we have for you this week. Thanks for joining in, and we'll see you next time. Bye-bye.
Cheers. Bye-bye.